Hey there, small business owners. I'm Katy Martinez. I'm the Profit Finder. Today, let's talk about QuickBooks. You've heard the name before, right? For decades, it's been the industry standard for the way to manage business money. But if you're anything like the hundreds of entrepreneurs that I've worked with, you might be saying to yourself, what is QuickBooks anyway? And why does every video out there sound like a sales pitch instead of explaining it in simple business terms? Well, you've landed in the right spot. Today, we're not selling anything. Instead, I'll give you a practical, high-level overview of this powerful software package. And I'm going to break down its core features so that you can decide if it's the right fit for your unique business. Are you ready for some straight talk about QuickBooks? Well, then let's go inside and chat. Okay, now that we know why you're here, let's start by tackling a huge misconception about QuickBooks. Many small business owners, myself included, wish that it was like a magical robot or genie that would handle your bookkeeping automatically. You just pour in your bank statements and poof, perfect financials. But here's the truth. QuickBooks is not that robot. While it is constantly adding incredible automations to make your data entry easier, like pulling in transactions from your bank account or your credit card, you are still the brains of the operation. You have to ensure that all your business activity is recorded correctly. And just as importantly, you need to understand what those reports are telling you. So if it's not a magical genie, what is QuickBooks? Well, at its core, QuickBooks is a sophisticated digital hub, a central storehouse for all your business's financial information. Think of it as your ultimate financial filing cabinet, but one that can also do complex calculations and generate powerful reports. It provides some amazing tools to help you manage your money, but only if you understand some fundamental accounting principles first. Without that groundwork, it's just really expensive data storage. Here are the core features of QuickBooks that I'm going to cover in this video. We're going to start with income and expense tracking, then we'll go to invoicing and accounts receivable. We'll flip the coin and go to the bill payment process. Then we'll take a look at bank reconciliation and financial reports. I'm also going to include information about the payroll process. Finally, I'm going to cover what you need to know and do before you switch into accounting software. Are you ready? Let's get started. First, let's talk about income and expense tracking. This is where the magic, meticulous organization begins. Imagine QuickBooks as a super fast digital ledger. If you were to connect your bank and credit card accounts, it would automatically bring in the transactions from those accounts into the software. For example, let's say you bought office supplies at Office Max with your business credit card. That transaction will automatically show up in QuickBooks from your credit card feed. Now, here's your job, the critical how it works part. You need to tell QuickBooks exactly what that transaction was. You associate it with a specific category or bucket from your chart of accounts, like office supplies. QuickBooks might try to guess based on similar past transactions, which is helpful, but you are the one in control, ensuring accuracy. With additional integrations, you can also connect sales platforms like Stripe, Shopify, Amazon, PayPal. This will streamline getting your sales data directly into QuickBooks, which is a huge time saver. However, even with these integrations, you still have to monitor it and ensure that the data is being categorized correctly. This would also include any fees or costs associated with those platforms. So the biggest takeaway about automated transactions is this. It's your responsibility to understand what categories everything's being put into and why. Next, let's talk about the essential lifeline of any business, getting paid and confidently tracking every dollar that is owed to you through the invoicing and accounts receivable functions. QuickBooks offers a really powerful way to streamline these processes. You can generate professional invoices right inside the software and customize them with your business logo and the business details. Here's how it works. You simply navigate to Create Invoices and then fill in the crucial details: who your customer is, what goods or services you're billing them for, the quantity, rate, and of course the payment due date. Once it's ready, you can either print it out or, even better, send it directly via email from QuickBooks, which could be a huge time saver. Now, the equally important part: recording the payment. When that money hits your account, you go to the Receive Payment function. You select the customer, link the payment to the correct invoice, enter the amount and how much they paid, and then record it. Just like that, QuickBooks instantly marks that invoice as paid and updates your customer's outstanding balance. These powerful features truly streamline your payment process and give you a real-time pulse on what is owed to you. Any invoices that are still unpaid are what we call accounts receivable. Staying on top of unpaid invoices is critical for maintaining good cash flow. It's not just about sending invoices, it's about actively managing the collection process to keep the money flowing into your business. Now let's flip the coin and talk about the other side of managing business money: the bill payment process. Just as crucial as getting paid is smartly paying what you owe. And yes, QuickBooks will help you track your outstanding bills and record those payments with ease. The mechanics are pretty straightforward. Just like creating an invoice, you go to Enter Bills and enter all the necessary details. That includes your vendor's information, the due date, the amount you owe, and what you purchased, whether it's office supplies, rent, accounting services, or inventory. You can even attach a scanned copy of the original bill for easy reference later, which is a fantastic organizational tool. When it's time to pay, you go to the Pay Bills function. Select the bill you want to pay and choose your payment method. That might be recording a bank transfer, a credit card payment, or even printing a check directly from QuickBooks on your printer. QuickBooks instantly updates your vendor balances and shows the money leaving your account. This isn't just about paying bills. This is about actively managing what your business owes. Outstanding bills are known as accounts payable, and strategically managing them is an important way to control your cash flow. With both your invoicing, accounts receivable, and your bill payments, accounts payable, you're doing something incredibly important. You're consistently placing every dollar of your income and your expenses into those categories or buckets that we talked about before. This digital categorization is how you are then able to run the powerful reports that will break down exactly how much you have spent and how much you have earned in each category. This is the financial story of your business. Are you finding this content helpful? Well, then subscribe to the channel, like the video, and share it with a friend. Now let's talk about a feature that is often dreaded by small business owners, but it is arguably one of the most important things you can do for your business's financial health: bank reconciliation. You can use QuickBooks to reconcile both your bank and credit card statements. And this process is the best way to check the integrity of your financial records. Reconciling your accounts means that you're going to be checking to make sure that every transaction you have listed in QuickBooks matches exactly with what your bank and credit card statements say, and making sure those transactions are also recorded inside of QuickBooks. It's about bringing your books and your bank records into perfect harmony. Here's how this crucial process works. After selecting the bank or credit card account you want to reconcile, you enter the ending balance and the statement date directly from your actual bank statement. QuickBooks will then display a list of all the transactions you've recorded in your books. Your job, and this is where you put on your financial detective hat, is to go through your physical bank statement line by line and check off or match each corresponding transaction in QuickBooks. If you find a transaction on your bank statement isn't in QuickBooks, maybe a bank service fee or some interest earned, you simply add it directly within that reconciliation screen. The ultimate goal is to get a difference down to zero. If you finish matching up everything and there's still a difference, that's your cue to to investigate. It could be a missing transaction, a duplicated entry, or a wrong amount. This is where you roll up your detective sleeves and work to solve the mystery. While it may seem tedious, and I still think it's like a game of Where's Waldo, bank reconciliation is a vital part of making sure there is 100% accuracy between your books and your bank statements. It's the ultimate fraud detection and error checking tool for your business. QuickBooks does offer automated matching to help speed things up. As a business owner and an accountant, I can tell you that consistent reconciling is one of the easiest ways to save yourself massive headaches, catch errors early, and avoid losing precious dollars down the line. It truly gives you financial peace of mind. All right, now let's get to the really exciting part, because there is absolutely no point in putting all this financial data into software if you don't get something incredibly valuable back. And in the world of accounting, that extremely valuable thing back is financial reports. These reports are your business's scorecard, its vital signs, and a roadmap, all rolled into one. QuickBooks makes generating these reports very straightforward. You simply go to the Reports section and select what you want to see. Let's start with the one that most business owners are eager to check, the profit and loss statement. You might also know it as the income statement. This report tells you a critical story about how much revenue your business actually received during a specific period, whether that it's a month, a quarter, or entire year. It will also show you how much you spent to generate that revenue. If that leftover amount is positive, congratulations, that's your net income. If it's a negative amount, meaning your expenses were more than your income, you're looking at a net loss for that period. But that's just the beginning. QuickBooks can generate a number of other essential reports, including the balance sheet. Think of the balance sheet as a financial photograph of your business at a very specific point in time. It shows you what you own, your assets, like cash in the bank, equipment, or even accounts receivable. What you owe, your liabilities, such as outstanding bills or business loans. And finally, your ownership stake, your equity, which is essentially what is truly yours after accounting for everything you own versus everything you owe. These reports are how you learn about the health and the direction of your business. QuickBooks is fantastic at presenting these numbers neatly, but here's the crucial point and where you come in. QuickBooks presents the numbers, but you are the one that has to interpret them. Do you have a healthy profit margin that will allow for growth? Is your debt manageable compared to what you own? This ability to read and interpret your financial story is exactly the kind of essential knowledge you need to be able to confidently manage your business finances. Here's one more crucial area, especially if your business is growing and you're bringing on team members: payroll. And no surprise, QuickBooks can help you with that too. If you're already confident in processing your own payroll, calculating wages, withholdings, and filing those tricky tax returns, then the QuickBooks Payroll module is a great tool. It can produce paychecks and help you track exactly how much you owe in payroll taxes. However, if the world of payroll taxes and compliance feels like you're talking a foreign language, and it does to most small business owners, you have several smart options that you can consider. You can hire the QuickBooks team to do your payroll for you, and it will be done right there through your software. This keeps everything in one integrated place. Or there are third-party companies like Gusto who specialize in providing payroll and HR services. They'll process everything, file your taxes, and often they're able to send that data right back into your QuickBooks file. Another option you might not know about are professional employer organizations, PEOs. This can be a game changer for small businesses. PEOs can handle all your HR, payroll, and benefits paperwork. They'll even provide workers' compensation coverage and file all the tax returns under their federal ID. So all you do is write a check, one entry for your accounting system, and they take care of all the taxes and the headaches. Just know that PEOs typically look for companies that have a minimum annual payroll of $50,000 to $100,000 before they'll take you on. And finally, don't overlook the possibility of hiring a local payroll service. They'll process everything for you. And another benefit is it helps you build stronger connections within your business community. Just remember, no matter who you use, make sure that your tax deposits and your tax filings are being made accurately and on time. That's a lesson learned from experience. We've only scratched the surface of what this powerful and robust software can do. QuickBooks offers other modules and functions for specific industries or advanced needs. In fact, this is one of my favorite aspects about QuickBooks, and it's a real differentiator from other software packages. As your business grows and your financial needs become more complex, QuickBooks can grow right along with you. This typically means that you don't have to switch to another accounting software package as these needs arise. This will save you significant time, money, and headaches down the road. As I mentioned in the beginning, before you commit to using a software package like QuickBooks, there are some important things you need to understand. This isn't just about choosing a software program. It's about understanding a fundamental shift in how you track your money. First, the moment that you commit to using accounting software, you are obligating yourself to use a thing called double entry accounting. That may sound intimidating, but it's simply a system where every transaction has two equal and opposite entries. Think of it this way. When you purchase something on your credit card, one entry increases your credit card debt, what you owe, and the other increases your business expense. This two-sided recording is precisely how accounting software can generate those powerful balance sheets and profit and loss statements. It's the engine behind all those insights. If you've been using single entry accounting, where you just track purchases with a single entry, easily done with a simple spreadsheet or even pen and paper, this is a significant difference. Second, know that when you move into accounting software, the very first step is to set it up. You have to teach the software the specific categories or accounts you want to use for your business. This is called your chart of accounts. You'll also want to load up the software with all your customers and their contact information, and do the same for all your vendors, the people or companies you buy from. And don't forget to customize your invoice format to reflect your company's branding and appropriate headings. You'll make your life much easier down the road if you take the time up front to set up your item list with all the products or services you offer, so you can select the appropriate one quickly when you create invoices. Think of this setup as building the foundation for your financial house. Finally, you might be wondering, when do you know that it's time to switch into accounting software? Well, here's a good rule of thumb. If you consistently find yourself spending more than 5 hours a month doing manual data entry and calculations to do your bookkeeping, then it's a good time to start thinking about switching into accounting software. At that point, the efficiencies that you'll gain from the accounting software will usually outweigh the time that you're going to have to invest to learn and manage the software itself. The key to successfully switching over to accounting software, though, is to first start with manual tracking systems, like those I teach at Keeping My Dollars. These systems are designed to help you build the foundational knowledge you'll need before you even touch accounting software. When you understand the why behind what the software is doing, you'll find it to be much less intimidating. You'll truly be able to leverage the power of the software without being just a data entry clerk. Are you ready to take control and learn how to manage your business finances? Well, then check out this next video where I share 5 lies that could be holding you back and what you can do about it. Until the next time, shield your profits.